Finally, the insurance bill is expected today in Parliament. Quite a few policy moves that have taken place, and I don't know if you guys also saw, we'll get more details on this, the new Manrega scheme. Manrega will now be replaced. I don't know if it's renamed or replaced or... Okay, there's a labour scheme which is now no longer going to be the Mahatma Gandhi National Rural Employment Guarantee Scheme. It's now going to be Viksit Bharat Guarantee for Rozgar and Ajivika Mission. And
VBG Ramji.
VBG Ramji. I think none of these abbreviations are by chance. Everything in the political arena is thought of very well. This is 125 days of guaranteed work per rural household annually, which comes in. Now, I don't know. So it's not different from Manrega in that sense. That was also 100 to 125 days. But I did think we were done with this requirement at this point. But clearly not at this stage at least. Or
apparently
at this
there's going to be some sharing of wages by the state and the centre as well. So a few nuances within the scheme might change.
Yeah, states have to pick up part of the bill. So that from a fiscal perspective is important. I'm talking more about point of need for us as a nation to still have 125 days of guaranteed work when you already have in some way or the other many states rolling out minimum wages through monthly payments to women in the family. And a lot of states have that going on right now. So that, plus you have free rations coming in.
Yeah,
so
I think it's an important question to ask.
Why is that level of support required? I'm not saying it shouldn't be, but why is it required is the only question. But nevertheless, another important health insurance reform that will be rolled out today. And I'm going across to Shrimee, our Delhi Bureau Chief, to explain what are some of the pieces of the draft bill which may not make it to the final cut.
Well, clearly, insurance bill marks a major shift by opening the sector to 100% FDI, reflecting government intent to deepen the insurance reach in a largely underinsured market. However, the final draft of the bill also reflects a clear pullback from some of the key structural reforms, actually two major reforms, which was the part of the initial draft. One is the proposal for a composite license, which would have actually allowed insurer to operate across life, general and health segments under a single license. That have been dropped, which also means that insurer will continue to require separate license and entities for each segment they are operating in. Second one is with respect to the open architecture for insurance agent, which means that agent will still not be able to actually freely sell products from multiple insurer. This also somewhere means that the existing distribution network, monopoly, and even bancassurer kind of models, remain dominant, as we are seeing in the case of LIC and SBI. So in short, the insurance bill open door wide open for foreign investment, focusing more on capital infusion, stability, strengthening the power of the insurance regulator, that is IRDAI, giving them greater authority over insurer and intermediaries, etc., and even proposing tightening of legislation towards governance, compliance and disclosure norm and harsher penalties for, violators. But deferring these structural and more of a competition enhancing reforms, clearly, sending a signal that government is taking a kind of calibrated approach, avoiding any sort of disruption in the current market setup. And what we've been given to understand that these reforms will be reviewed separately and could be taken up eventually, but not the part of this final draft which they are going to introduce in the Lok Sabha today.